session, which is Expert Bytes. While the panel discussion is a great place to bring in views from different perspectives and find convergence in those conversations, Expert Bytes are to bring in experts and allow them the freedom to share what they want to share, their perspectives, what are they doing about those situations, challenges, or their perspective on the industry. So we have got Ashwar, we have got Aman, we have got Nazir, and we have got Christoph. So all four of them, I'll invite them one by one to share the invite. So okay, the screen share is gone, and now I bring to you first would be Aman. Aman Singh, you are here. I invite you to join me, and let me introduce Aman first. Aman Pal Singh is the founder, managing director, and CEO of B4E InsurTech Inc. and Benefits for Expats Inc., where he leads the evolution of insurance through AI and digital infrastructure. With an extensive leadership background across MENA region, Asia, and North America, he specializes in helping insurers and MGAs modernize their business models and expand their global reach. He works at his work at B4E InsurTech focuses on no-code infrastructure as a service, enabling digital product launches in under 30 minutes. A strategic advisor to boards on governance and digital transformation, he is dedicated to making insurance inclusive and affordable by closing the global protection gap through technology. Over to you, Aman.
Thank you, Hemant. That was a very nice way to put that across as an introduction. Just to add to what you've just mentioned, as we speak, technology is changing the world, and everything is also getting changed along with it, and so is insurance. While insurance is almost a 4-century-old line of business, it has had its own challenges when it comes to the fact that it's a very risk-averse business. So innovations are there, but innovations are not there to move forward. They're more to move laterally or even regression. But that's what innovation has been. But what's changing now with the evolution of how AI and then AGI is going to be coming across over the next couple of months or years is that there'll be a lot of new age insurers or insurtechs that will come into the forefront who would be then leveraging the technology to develop and innovate and then go to market to cater to the needs of the wider population across the planet. Now, just to share some high level numbers, insurance penetration averages around 8% across the planet. So there's a massive opportunity, and this is after 4 centuries of being into business. What's missing is that insurers today, they develop products which cater to a certain segment, a certain wallet size, and then there's a traditional distribution model, which also then only caters to the audience that would help them generate revenue for themselves. New tech tries to or will eventually replace the old traditional way of doing business. Now, I'm not saying that the large multinationals of the world would drop what they're doing and they'll suddenly become something else. It's a newer generation. So just to give you an example, a large intermediary who's sitting on millions of consumers as their client base knows exactly what their clients want. Now, they can't go to an insurance company and ask them to make products which are customizable, which are ready to be consumed by their set of clients. Now they can become insurers. They don't need 1,000 people team to run an insurance company. They can set up a company, run it with 100 people or less, and let AI do the rest of the job. So they have a lot of leverage that they can bring to the table with using technology, and that's why it's becoming more and more relevant in today's date and time. And we will see that evolution happen gradually over the next couple of years, where you'll have the big players playing what they do, and the new ones coming into the forefront, and then bringing those propositions to the market, and that changes a whole lot of things. So just that's a very high level view of what we are seeing as consulting partners, as tech providers in the space. But I'll pass it back to you, and I'll let others take on.
Sure. So just a quick one. I mean, what do you see as the biggest challenge out there from your vantage point?
So the biggest challenge is that the tech exists. The boards of the companies who are now going to leverage on that tech, what they don't understand is the implication of how to use and deploy, and then what does good look like at the end of the day. So that's the biggest challenge. Again, an example: board members get, so they are of course responsible for the responsibility of the business and the stakeholders and the eventual customers' well-being. But when the management puts across a program which says that they will deploy AI-led initiatives across maybe claims, maybe across customer acquisition or customer service, the board is not equipped to look at those as AI-related projects. They look at those as traditional digital transformation projects. And there's a massive difference between the two. So that's the biggest challenge, the governance side of it. And no one is talking about it as we speak today. So that's a short answer for you.
Thank you, thank you. So, I mean, that took me back 20 years because for 20 years, the first 15 years, I've been a change management consultant on ERP projects. And one
Uh-huh.
of the first things we would get into an organization and start talking about an ERP project being not an IT project, but a business project. Changing just that perspective took such a long time. So, yes, it's similar, I think, with AI also we will go through that phase where they will be looking at it as an AI project or an IT project or a productivity project rather than a business project, a business initiative. So, yes, the mindset change is always important. Okay.
Absolutely.
So thank you, Aman, for your perspective. I will call in Ashwar now, and let me introduce Ashwar first. So Ashwar Gupta is a builder at the cutting edge of finance and technology. As a founder and CEO of Kalpi, he is building India's first truly intuitive quant investing platform, empowering investors and institutions to create, backtest, and deploy strategies with hedge fund level sophistication. A CFA charter holder with strong foundation in quantitative research, he combines deep financial expertise with advanced capabilities in AI and machine learning to design systematic, data driven investment strategies focused on consistent, risk adjusted returns. He has worked as a senior quantitative researcher as a US based hedge fund and as a machine learning engineer at Geotab, building scalable data and AI systems. So, Ashwar, I invite you to share your perspective and the work that you are doing. You can unmute.
Thank you, Hemant, for such a lovely, warm welcome and introduction. And yes, so basically, in today's era, investing has become really easy with respect to AI, but to do it right is become much more harder. People have all sorts of right data, they have opinion, they have AI, but still, today I interact with a lot of investors, their portfolio is not able to beat the benchmark, and that is because of, when we deep dive we understand the reason. It is because of a lot of time the emotional driven decisions they make, right? So the today the gap is not just the information which has been shrink through AI, but it is more regarding the emotions and process led things which is still missing. So if I ask you a quick question, that how many of you bought a stock when it was going up just because it was moving up and you panic sell when it was coming down? I am guessing most of them in some point in time in life they must have done this mistake, right? And that is why a lot of investors we see they are not able to make returns, because it's not just markets are always bad, but it is because they are making decision at the wrong time. They're making decisions when there's a panic selling, they're making decisions not process led. They are driven mostly because of their emotions, they are taking FOMO based decisions, and that's led them to take wrong decision. And that is why I firmly believe now people should shift from discretionary based trading or investing to more systematic rule based investing. Essentially, what systematic rule based investing is, you have predefined rules: when to exit, when to enter, how will be my stop loss look like, how will be my entry criteria, and all, so that you don't make decision at the point of the moment, right? Because when you take decision at that moment, your emotions play a big role. So people who are listening this, who are not so sophisticated in terms of investing, I'll give them a very quick framework which they can use to start their investing journey or to have a process led investment approach. Essentially, it's a three-step framework. First is step one is to decide the asset class, how much allocation you would do to different asset class, right? So starting point would be a formula which we use is 100 minus your age. Essentially, if I am 30 years, I will be 100 minus 30, that is 70%. I will allocate to slightly riskier asset like equity, and remaining 30% I would allocate to more safer assets like debt, gold, all of these forms of assets. Now, the step two, how will you allocate those 70% in different instruments, right? There we follow a concept of core and satellite portfolio. Essentially, what we say is if you're just starting, your core portfolio cons- should contain basically a stable kind of assets which could give you a good compounding returns in long term, and the churning and rebalancing is not that high. So essentially, you can invest in ETFs, you can invest in index funds, mutual funds. And your satellite approach of portfolio, there you can try out with different tactical approaches, different sector rotation strategies, different other factor models which you want to play on. And eventually, as you grab more hold in these kind of strategies through learning, through time, you understand the nuances, you can gradually shift from core to these satellite portfolios so that your alpha increases a lot. And that's what we are trying to solve at Kalpi. Kalpi is essentially a one-stop solution, like a no-code drag and drop platform where investors can build rule-based portfolios. They can build systematic basket of stocks. One click, they can backtest these strategies to understand the risk and return these strategies have given in the past, and they can invest in these models. Essentially, we also cater to a lot of institutions where we give them like a hedge fund grade infra where within matter of minutes they can build these sophisticated strategies which they can play on, research, and eventually finalize the best one that is working for them. Post that, what I firmly believe that in today's era, people who are just looking for returns, they will not get it through the emotions but more process led things. That is why building process is very, very, very much important for them. And lastly, I would like to give them this final question is, don't go after multi-bagger picking of stocks or something like that. Don't invest your time there. Rather start focusing on building processes, systems, because in long term you will get a much more better kegger when you build through process rather than doing a stock picking. So yeah, thank you so much for that.
Thank you, Ashwar. Those were some interesting insights. And I'm sure there are people out there who would find that very useful, practical, and they'll be able to apply that also. Thank you. Thank you
Yeah,
very much. With that,
thank you.
I move to our next speaker, Christoph. Christoph is an entrepreneur and chief strategy officer at iCapital Ventures, where he also oversees the ICB Participations Equity Fund and CAPEX financing for startups and SMEs. With over 20 years of experience in finance and technology, and as a co-founder of Spotties, he supports the transformation of economies towards sustainability and economic inclusion through digital assets and innovative governance mechanisms. Passionate about collective intelligence and digitalization, he connects ideas, talent, and capital to structure high impact operations in Europe, Asia, and Africa. Christoph, over to you.
Thank you very much, Herman, and thank you for your introduction. I'm very happy to be close to our panelist colleagues, and very interesting because they are talking. Aman talked about governance, Ashwar talked about decisions, investment journey. So that's typically the things that I would like to share with you today with our experience at iCapital Ventures. Because wealth management and investment resembles like an all-you-can-eat buffet. You see, you have listed equities, ETFs, debt, funds, structured product, etc., etc. It's very rich, but it can become very complex for an investor. Of course, institutional investors are, it's quite different, but retail investors, and we spoke about it on the previous panel, it could be quite complex. And at the same time, the financing and the strategic support needs of SMEs or startups remain massively under-addressed. However, they generate most of the employment and innovation because they are 80% of the added value on economy on the market. And it's precisely in this gap between saturated public markets and underfunded real economy through SMEs and startups that our work at eCapital Ventures and ICD Participation is based. So I would like to share our experience on that, because what is changing is not only the volatility of the markets, but it is the increasing complexity of finance and finance products. The structured product, the private equity, private debt, tokenization, and the real ability of the leaders, investors or entrepreneurs to navigate in this environment is not so easy. So on our side at eCapital Ventures, we have chosen to allocate focused on the real economy, SMEs, and startups with our international scalability, with a data-driven OPEX CAPEX model. And this is very important because we finance both short-term cash flow requirements for OPEX and long-term growth investments with CAPEX. Based on a proprietary protocol called the DDFM, the data-driven financing model. So we are going close to the previous panelists that spoke about it for the investor journey, which combines governance, data quality, and tokenized collateral. In concrete terms, our allocation is not limited to equities versus bonds or ETFs or anything, but to see what quality of governance, what quality of data and collateral is behind each euro invested by an investor, and how to articulate private and public equity participation via our subsidiary ICD Participation, that is our entity to have participation into SME and startups through OPEX and CAPEX financing, and as well through tokenization with our digital platforms. This model has been tested for the recent years on liquidity stress cycles because, as the previous panel said, the geopolitical context is quite different. And the combination of golden share we have with the SMEs and startup, our own token called LIRS collateral, and the supervision for the governance with our non-executive directors, advisors, locally in each country, has enabled us to protect the investors, that are our first priority, while maintaining the financing and management of the companies. And for that, we have an accreditation process to see if the governance is at the right level for the investors and for the entrepreneurs. Then, in this finance that has become complex, the opportunity is not to launch just another standard product, but to offer tailor-made architecture in finance for each use case, each startup, each SME, because each context can be different. Portfolios of finance, governance standardized, rated, tokenized, and supported over time. And whose managers of these companies, of the entrepreneurs, are accredited on the fundamentals of financial strategy and investor relations. This is with eCapital Ventures, what we do, and we take stakes in startups, on SMEs, from seeds to SMEs that have already validated their model and we can support them via our Neo Bourse, Neo Exchange, called eCapital. But above all, we remain by their side over the long term, because it's a long-term partnership when you have a financial strategy. So through our non-executive director in our subsidiaries, they are appointed in each finance company to co-drive the financial strategy and the governance with the investors. The entrepreneurs, the managers of these companies, they follow a path of support from our side, an entrepreneurial accreditation. It's like a SME journey about finance via our digital platforms, our business clinics, and our educational platforms. In parallel, we also accredit the investors, particularly retail investors, on their understandings, because all this complexity is rich, but you have to understand what you are doing. And you were talking about the investor journey, so it was very important in that way. For the private markets, the digital finance, the risk management, and the capital architecture, which creates a common language before entrepreneurs and investors. As a head of strategy of eCapital Venture, my conviction is that true diversification is no longer between equities, ETF, bonds, stocks, anything, but between complexity of finance and tailor-made solutions backed by the real economy. Our answers at ICV is more to standardize the governance through our digital platforms, the golden share, the participation into the SMEs, and the support of the non-executive directors. The accreditation of the investors, but as well of the entrepreneurs, to have all the understandings of the decisions they have to do or the financial strategy in a long term they want to provide. As well, and structured tailor-made investment vehicles that we provide that allows each investor to build a personalized exposure to tokenized OPEX and CAPEX portfolios. It's our way to use financial tools to create clear, understandable, and tailor-made solution for investors and for companies. So if you want one of my words, it's the world of finance can be incredibly complex with all these innovations, and this is good for the startups and the SMEs and for the economy. And what is important to understand is where you go, how you go, and with who you go. So from the OPEX to CAPEX, from private to public, from backed by the same backbone, governance, data, collateral, with this double accreditation, investors, entrepreneurs, the guarantee is the maturity of the companies in the eyes of the capital. This is what I wanted to share as experience at eCapital Ventures, and hope that it mixes with my colleagues about governance, about investor journey, but as well SMEs and startup journey.
Thank you, Christoph, for those insights. I'm sure these are pretty pointed conversations. Each one of those points can be a very long conversation, and we'll have more of those conversations. Well, that brings me to our last speaker on the Expert Bytes. We have Nazir. Nazir is a dynamic leader who brings together banking excellence, entrepreneurial drive, and a deep commitment to building future-focused businesses. With 25 years in corporate and commercial banking, he has strong expertise in managing client relationships, driving business growth, and navigating complex financial ecosystems. A serial entrepreneur and a three-time founder, he has built and scaled ventures across entertainment, media, and healthcare. Imagine a finance professional building in entertainment, media, and healthcare. He's founder and CEO of Cavendish Life Polyclinic in Dubai, a premium healthcare and aesthetic center, and the co-founder and CMO of Trend Tree Media, a digital marketing agency, helping brands create impactful online presence. He's also a fintech advisor, angel investor, and a startup mentor. So, Nazar, over to you.
Thank you, Hemant. I think that was a wonderful introduction, and it sounded you were talking about somebody else, it was not me. Jokes apart, I've been in Dubai for last 32 years, where I started my career, out here, and it started with the startup ventures over here, which has come into the limelight in the last decade, last 15 years, But me and three of my colleagues from the same MBA batch in '94, we had our startup journey in Dubai. So that's how I laid my foot out here in Dubai. And we had that wonderful venture for 5-6 years on the investment front. And then in 1999, I became a banker, which carried on till 2022. And that's why I laid down my boots. And then I said, so let's move towards the startup front, wherein I started working with youngsters and advising them, guiding them. And during that journey, I myself became interested in investing into the startup, uh, the whole startup world. And that's how I started my two ventures. One is the social media company. The another one was, again, there was a young doctor, who had this wonderful project of polyclinic. And it was quite promising. And I took a shot, and then we started, and here we are, in our 10th month, and we're doing wonderful out here in Dubai. So it's been a wonderful journey overall. And theater is something Hemant mentioned, that I also invested in a theater. And yes, there were again two young co-founders. We happened to meet up over a coffee. This was in 2014, and the project sounded good. And I myself was interested in theater during my school days. I said, so it was a way of giving back to the community. And just out of the thing, I said, let's do it. And I invested, and we started, and we never knew, we'll continue for more than a year or two, and this year we're completing 10 years. So it's been a wonderful journey. Startup itself, the whole, the entrepreneurship journey. Though I was in banking and all, the entrepreneurship journey has been fantastic, and I enjoy it. It actually keeps you young. So that's the whole thing. And I was very sure, that post 50, I don't want to work and retire on a chair. So I just laid down, resigned, and then last 3 years, 4 years, I've been involved fully into the whole business thing. So that's me, which is where I'm current. But having said that, finance is my core thing. Banking is my core, activity, which has always been there since 1999. I've been advising and taking all the business owners and investors and all through the journey, wherein, what happens, you guys make money everywhere. End of the day, where does it land? It lands in a bank. And though it sounds the most simplest of thing, but there's the most complicated issue where all the owners, investors, founders, they come to a problem wherein opening an account becomes a bit challenging front with any of the banks, wherever you take in the world, So, like being in UAE, now we've got more than 50 banks out here in Dubai, where you can open your conventional account. And if that's complicated, you got the digital banks also. We've got more than 5 digital banks, Live is there, Vio, Zen, M-Bank is there. So they open your accounts in 2 or 3 days, So what I would like to advise, like the businesses out there, is initially, if you're a startup making your foot out here in the UAE, start with a digital bank. Don't complicate things, because what happens, when you go through the normal banking compliances and challenges, and plus submitting the documents and all, banks do have their own sweet time in opening the accounts. Digital banks have made it very simple with your MLS ID, the company documents and everything. You can have your account number in 3-4 days, start the banking. Second most important thing, which I would like to highlight to most of the businesses out there, is that when it comes to setting up of a company in the UAE, don't try to complicate it. Don't try to come with branch companies which are set up in India or elsewhere, and then you open a branch account. You'll make your life more complicated, miserable, because the thing is that every documents, which are, say, if it's an Indian company or a US company, you'll have to get it attested, both out there in the country of origin as well as in the UAE. Then ultimately, in case if there are individual owners, perfectly fine. But if then there are trusts or some other complicated structures which are involved, then the bank would ask you for the ultimate beneficial owner details also, which sometimes can lead to days and months, in just getting the documents in order. So in case you want to set up something out here in UAE, Try to make it simple. Make it a simple single or partner-owned companies or single entity. That way, all the headaches and everything is taken care of. Now, once you open the account, most of the startups and all, they have lots of options to fund the businesses through VCs, private investors, or various other financing options which are out there available in the market. Like the previous panelist, Mr. Shetty, was mentioning about that end of the day, these consultants would be there arranging the finances and all, So yes, you can also look at banks, and banks earlier, for startups and all, financing was a challenge. They never did consider greenfield financing. They always used to look at companies who've been there in the market for more than 3 years. They wanted 3 years audited balance sheets and all that stuff. But now, in fact, there are certain banks who also lend to companies which are only 6 months old or 12 months old based on their statements or based on the businesses what they're doing. So yes, you can always approach banks. In fact, you can discuss with them about your projects. They have project financings also. And secondly, if you are in a sustainable business, and so banks do have special portfolio allocated for that. Interest rates are low, and in fact, even they have been mandated to lend towards sustainability. So they also do look out for good projects which are available out there in the market.